Yeah, welcome back. I was telling about the S&P 500. So market might continue all the way high, crossing all-time high, and then the market might give us a very strong correction of 37%. Immediately, yes, it might not happen that market might cross all-time high. Market can give us a correction, pull back, and then market might trend higher with a very fierce momentum on the upside, and then a very sharp selling taking us all the way to 33,350 levels or 3,320 levels. So this kind of this kind of trade can come into play. We need to be prepared that market might go beyond 19,000, 19,200, 300 also, as Nifty has already outperformed S&P 500. So we might see further melt up kind of move to 19,200, 19,300 also, or even beyond that. And once the market starts coming into selling zone, or sharp selling can come into play, that time you might see 40, 45% or 35% of drop. So market might correct from 19,200, 19,500 also. But yes, a correction can come into play as interest rates are not favorable in terms of big corporates. So this the recession is imminent, and we might see a 35, 40% of drop. So if any day there is a 44, 35 or 40% of drop, we might see Nifty crossing 13,000, 13,500 levels as well. So that drop would be very fierce, and this we need to be prepared to see this kind of drop and be placed for capturing this kind of drop. So liquidity in hand is bare minimum, so that if there is a drop, there is a crash kind of scenario which comes into play because of n number of reasons can happen. Once the selling can come into play, then we might see that this is the reason or that is the reason for that the market has come into selling or fear selling. But before that, we need to prepare ourselves on portfolio level as well as on liquidity front to capture a selling, a fear selling that might take us to 13,900, 14,000 levels, and even beyond this. So it's better to be prepared. So long-term puts is very good opportunity where we buy a December or March put to capture this kind of trade setup, and we hedge our portfolio so that if at all market gives us a momentum on the downside, our portfolio bleeding will not happen, and the liquidity accumulated through puts we might add actually onto our portfolio, so that if there is a correction and then market reverses, our portfolio might double in a very short span of time. So this kind of trade setup is required. And when the wall is low, around 11.5, 11.2, so December puts are very cheap. So this is a good time where we buy December puts, and to capture a trade where recession might come into play and take us all the way to 14,500 or even beyond 13,500 levels as well. So it's better to be prepared, as we have discussed in this also, that there might be some upside, but a downside risk is imminent as interest rate is very high. Thank you for joining Trade Talks. Happy trading.